Good morning, traders. This is Michael coming to you from GammaEdge on Tuesday, January 7th with our pre-market morning strategy and briefing session. As always, we start with the three pillars here at GammaEdge: sentiment, structure, and trend. Looking at our market trend model heading into today, we did have a failure of our instantaneous CT, which is our bolded white line back below our railroad track moving averages. This is indicating obviously sellers stepped in and took control of the market around midday. We continue to see weakness overall in the market trend model, and then our colored ribbon continues to expand so far with red below cyan. So we'll continue to watch this. As we always say here at GammaEdge, we are prone to failure when we're coming from the underside of the colored ribbon, trying to move back through and establish a bullish state. So we'll intently watch this throughout the day to see if we see some sort of recovery or if we continue to see weakness and failure with the instantaneous intraday bolded white CT moving below the railroad track moving averages. The SPXP, all expiries turned on. We are call dominated. Expected move for today is 0.82%, 49 points. We do see those larger iron condor contracts that we talked about that we'll discuss on the 0 DTE. Significant levels there. Transition slightly wider, 59.50 up towards 59.95. We see PGEX there at 6,005 and NGEX at 59.45. So we've kind of bracketed those iron condor legs and also the goalposts there with the transition. As of now, pre-market looks like we'll open inside the transition, which again is uncertainty type range, where we can move up and test the upper range of the iron condor or the top of the transition, or possibly if we see some more weakness down towards those lower legs of the iron condor or the bottom of transition, or we could be just completely stuck and between those legs today and between transition and even oscillating above some of those legs and then back in. So we'll watch this on the 0 DT. We see a COI up there at 6,100. That's most likely not reachable today. The SPXP, 0 DTE, so we've outlined those iron condor legs there, presumed short on the both sides, and then matches the PGEX and NGEX as well as our transitions. You do notice net stat 59.50, 59.45, pretty important level, which is also the confluence, obviously, of the transition as well as those iron condor legs. Moving below that, understanding that we had significant negative net deltas to the overall complex there, and we could see some sort of weakness down towards that gradient at 5,900. So we'll watch that, not anticipating that we get below those legs for a significant amount of time, possibly today, but if we do, we could see some more weakness down towards 59.25 first and then 5900. To the upside, if we do get above that 6,000 in transition, we see the possibility of moving up towards 60.25 and then obviously 60.50 up there that we've outlined with that purple gradient. Going to the delta balance charts, the Qs do remain slightly bullish. We see a recovery in the overall delta balance as well as the left-hand plane and right-hand plane. So we'll continue to watch this. These seem to be staying call dominated. Obviously, we saw a significant move in some of the Mag 7 stocks yesterday, NVIDIA being the most notable, and dragging the rest of the Qs up with it, as well as semiconductors seem to be staying call dominated and having a positive flow. So we'll watch those. If we're looking for stocks to move up and you're curating your watch list, I would definitely just head towards the call dominated, call dom del list initially, and then go ahead and deep dive into those and make sure the delta balance is staying at +1 on those stocks. And those initially would be the first set of stocks I'd be looking for to go long if the market conditions present themselves. But as of now, the market trend model, obviously just in a state of uncertainty back and forth with choppiness. So difficult really to put any significant capital to work on the long side at the moment until we get a better clarity and clear signal via the market trend model. SPY continues to look bullish, obviously, into next week. Delta balance moves back towards +1, and we see left-hand plane and right-hand plane call dominance exerting themselves above 0 on out in time. So we'll continue to watch this to see if this is maintained or do we see some sort of degradation in the delta balance. SPX, we continue to see it weak for a little bit here, and then we do see a recovery into next week also. back towards the +1 delta balance and recovering above the zeros on both of the left-hand plane and right-hand plane. So again, continue to watch this day over day to see if we see any changes. As of now, we have bracketed levels. 6,000, 59.45, 59.50 are pretty important. So we'll go ahead and go on to the game plan for today. I've drawn the drunken sailor range down towards 59.45 and up towards 60.10. Yesterday was a very nice setup, at least from a TA and gamma delta standpoint. We saw that initial push above 6,000, topped out right around 60.20, 60.25, which we coincidentally are going to be watching today if we get above 6,000 again. So you'll have a TA level up there, a previous high level around that 60.25 to watch for some sort of reaction, whether it's a rejection or a stronger push through that level. Again, 6,000 to the upside is going to be kind of the line in the sand for me to watch. If we get above that and hold, opportunity to move up towards that 60.25, 60.30 level could be present. So we'll watch that again, drunken sailor range, top of that also. So laying out your if-thens of above, below drunken sailor or inside drunken sailor. As of now, we'd open just with inside the drunken sailor range. So scenario A for me would be a test of 6,000 and rejection, and the possibility of dropping back in the drunken sailor range if we see a significant amount of weakness, pulling back towards the the top of this price action level down towards 59.80, 59.75. Scenario B would be pushing through 6,000, chopping around the top of the drunken sailor range, and consolidating, looking at the vol M command and seeing positive call and put centroid slopes would lead us to setting up the probabilities of moving from 6,000 up towards 60.25. And then scenario C would be a retest of 6,000, drop back down, a second retest of 6,000-ish, and failure, and then possible decent amount of selling come in, driving us down towards lower to middle sections of this drunken sailor range. The kind of last scenario that I'd anticipate would be just a drop below this 59.70 middle drunken sailor range, and then push down towards 59.55 and then 59.50. I don't really see that as a scenario at the moment, just obviously due to technical levels and gamma delta levels and the iron condor sitting there that could provide some sort of stability to the downside and to the upside. But if we do get below that 59.70, 75, I anticipate weakness, maybe a quicker weakness down through those levels towards that 59.50 level. So that's kind of the if-thens for today. Obviously, we've laid out the commentary for the drunken sailor range. MTM market trend model game plan is also there, and then Taylor will be posting the morning SPX scanner and spreadsheet in the single stocks discussion, so make sure you check those out. Again, quick takeaway is uncertainty of the market. MTM is still weak. Overall complex is call dominated, but some weakness is still present. Below 6,000, I wouldn't get overly long unless the MTM is in confluence. Above 6,000, I changed to a little bit more neutral to bullish stance as long as the MTM has recovered those railroad tracks, and we see the bolded white CT moving from lower left to upper right. So that's my game plan for today. So that'll be it, and everybody make it a great trading day. We'll see you in the Discord in a few minutes. Thanks.